Now, as we start this video, we want to keep in mind that on the previous day, we got this great big program buy that shoots the premium up to negative 389. That's where this line is, 389. That's a big move. It does not invalidate the forecast of the premium that indicates we'll come back down and test 21.1250. But this big program buy is quite possibly going to affect the next day. So, as we move into the next day, now the premium is high as it starts off with, but it's certainly not as high as that program buy was. So what are you going to do? You're going to read the premium. Now, if, let's just point a couple of things out here. If that program buy is going to affect the next day, then we should get beyond the high of the previous day. Now we're just going to move this forward so you can see whether that takes place. And it does. We go right back up there. Okay? So that's rule number one. You get a big program buy that's going to affect the next day, then whatever happens in the morning, you got to keep in mind that we should be able to come right back up to that high. And as you can see, it does, but you don't know that for sure. It does not always work that way. Frequently it does. More often than not, it does. But you really can't know that until you see how the premium is, or how the market's behaving the following day. So you've got this heads up. So now you've got to read the premium. So we start this morning, premium is way up here, and we tag that high, and we have a fair amount of divergence here. Market's going to come down. So really, in other words, it's looking, if the market's going to move up, it's got to get some buyers. So we got to drop low to pull in some buyers. And yesterday, this is where you were at. Okay. Now keep in mind that's also where the premium was at. Look at this green line here. All right. This green line, I'm going to extend this. Okay. I'm going to extend that out. So, although the premium does, there is some degradation of the premium over the course of time. From one day to the next, it's not that significant. So, your threshold, as we hit these lows in here, particularly right up in there. All right. Well, tell you what. Let's be more specific. All right. Last time we were at those prices, yeah, we were a little bit higher, so we can just move that up just a little bit. All right. So general rule of thumb here. So we get this divergence, and the market begins to drop. And then you get that divergence in here at 604. You got to believe it. All right? You got to believe it. So you go long. Now, if this is the low, what are you going to see? Higher highs and higher lows. Pivot number one moves higher. That's fine. This pivot, it's a lower level, but not. Again, this doesn't matter that much. because you should see some big divergence, and you can get a lower read on the premium thereafter and still be consistent with the trend. And since this was our level, our threshold from the previous day using these lows as a guide, this is divergent. There's nothing wrong with that. So you're okay. But now you come up to this point, and the premium is the same. Okay, should it be? No, it should be higher. It's not. It's even. But it's divergent for that reason because it should be higher. And it's not. So down you come. Aha. All right, so now all you're doing is looking for some divergence, and you finally get it right over here. There's your divergence. And up we start to go. So now, if this market is going to short back down, to that low from the previous day, we've got to get a major divergence at the high. Okay? You've got to get a major divergence at the high. And if this is going to rally, the high of the day was over here. Now, you were divergent at that point. But that's your goal. That's your first goal. You've got to get higher than this for this to make any sense at all. So this market has got to get higher than 25.75 and really ought to be going up to 27.75. That's really what it should be doing to be consistent with yesterday's high. And if that program buy is continuing to cause buyers to rally this thing up, that's what should happen. So you've got good reason to just hold this trade as this moves up. Because at the moment, the market is confirming a long trade. Big divergence here. So up we go. We're going to hold it at least till here. And that happens right over here. Now, along the way, let's move this forward. What does the premium tell you right in here? Okay, here and here and here. Now there was your pivot. Again, it's okay for this to be a little lower. This pivot, it's okay to be a little lower. And we start to move up. Before we get very far at all, you get this big drop. And that's below that level from yesterday. I should have changed the color here. Let's just use this. We're below that level. That's not good. It's not good at all. Okay. Just want to pull this line down and say, it looks like we're going to need to test this. But that doesn't change the trend at the moment. It gives you a frame of reference as to where this market could go. But that's not enough, because you need that big divergence at the top to bring this thing down. So we're still moving up, and we get a pivot here. It's higher, but it's still lower than it was here. It's higher than it was there. So we're not going to worry too much about overanalyzing that. It should be higher, and it's not. All right. The question is whether this is too high, and it might be. So I'm not going to worry too much about this right yet. But the point is, we've got to get a big divergence in the premium if we're going to short this. So we move up here, and we finally get right back up to 27.75, where we were before. This is the high from yesterday. I think it was 27.75. It might be 27.50. I'm not going to worry about that. In any case, you got a big divergence here. Yeah, now you got a big divergence. So what do? You short it. You short that. Okay, and if you're right, then what's going to happen? You're going to get lower highs and lower lows on the premium. So we come up here, and we almost tag that price, and we get a lower high. Good. That's what we should have. We get a lower low here, but we get a higher low there. And this higher low is higher than it was here. Okay. We got a heads up here, because that was a significant drop. So that confirms that this market is moving down. But right here, it's confirming that we may be going back up and testing that high. And as we do, and we do test it, we fail. We don't make a new high. And if nothing more, we at least just tag the high, and we dropped even more. So down we go, and we're happy. And we're saying, yes, this is working. And now we come down to this low. And what do we see? 619. Okay. It's a little lower than it was over here. It should be what? Okay, this is 619. Okay. Now that's a big drop. Maybe we don't get too overly excited with that drop. But we look at this level here. We're at 620. This isn't quite as low. So if that's fair, this should be a little bit higher. And it's at 619. It is. So that doesn't really tell us much. Okay, we really don't know anything from here. It seems like it's confirming. This is about where we ought to be. Nevertheless, you get some buying going on. And then you drop to this level. And now we're even lower still. 552. The big spikes down. We're 551, 448, 648. And now we're even lower. So that's confirming the short. Okay? We're okay. But it moves up, and then all of a sudden we hit this level. 520. And we're higher. Okay, that seems out of place. 520 seems out of place. So now we have to be concerned with that. Okay, now I'm going to move this line down just so you have a point of reference. That's out of place. Everything else is saying, yeah, this is short, but that's out of place. So, as this market continues to drop, you got to be aware of the fact that this could very well move right back up because of that bar. So let's move forward. Now, we come to this point, this next pivot, lower high, and it's lower. Lower high still, it's a little bit higher, not much. It's a little bit out of place. Lower still, much lower on the premium, so this is going to send us down a bit more. And then we step up a little bit. That's not too much of a concern, and we're about even here. It's a little bit higher, not much of a concern. We come down to a lower low, but we're at a higher low. Shouldn't be that way. Market begins to move up. Premium moves up. Uh-oh. Okay. 563, 561, 560. Okay. Lower high, higher high on the premium. Not good. All right. It's going to move up. Comes down, gets a little bit lower, And then we step up again, and up we go. And now we come to 556. Now, is that divergent? It should be a little bit higher. Okay, it should be. But it should only be slightly higher. Because if you look at this level here, 563, 561, this high is at 25. Here, I think you're at 25. No, you're actually at 24. 24.75. So you're one tick lower than you were over here. But you're at a higher level. We're at 56 here compared to 63. Again, a bit of a concern. A bit of a concern. Now, you shorted this thing, and you're happy that you have. But with this kind of information, you need to be cautious. This market could turn right around and go back up. Now, the market finally does drop and tags that price that was forecasted way over here. So at this point, you were at 561. Now, as you come down here and you hit 561 again, we drop even lower. Pardon me. No, we're not quite as low. We're not quite as low. We're at 556. But that's reasonably close. Okay, so let's show you that again. I'm sorry, I read that wrong. I think I said 561. 551. And you're at 556. Pardon me. We're lower. We're lower. And so that confirms. Okay. All right, so do we have any concerns here? Yes, we do. We have a couple of concerns. The market is moving lower, and that's good, but it's given us a couple of concerns. A concern that it might go way back to here. It's going to shift this price here. Let's use a right just to find instead, so you've got a point of reference. Now we've hit that level, so premium has done its job, but you've got this pivot here, and that too is a bit of a concern. Okay, so I'm going to put a reference here and put a reference back here. Market is dropping. Everybody's happy. We're short, but we've got a concern. Now, we come to this low. We're at a lower low still, and we're happy. And then we come to here, and we're at a lower low still, but we're at a higher low on the premium. That's a concern. Shouldn't be. Should we go long? Well, the overall trend is down. So you ask yourself, is this a significant enough difference in the premium to consider that it is a major divergence? Your answer has got to be yes. This is a major divergence. Okay? It's a major divergence. You're at 642 here. Look at this. You were at 652 here. We were much, much higher. So yeah, that's major. So although the trend is down, And you knew what the market had been forecasting the day before about this big drop down to 21.12, I think it was. You got to be concerned. So let's just say you play it conscientiously, you go long. All right? So, what do you need to see to confirm that the market is still moving up? You need to see higher highs and higher lows. So here's your first point of reference. Now, what happens here is that it comes down and it goes a little bit lower. But it steps up again. So what should you do? Now, don't worry about getting stopped out here. So maybe you hold your trade. Maybe you average in. That's what we do. I average in when this kind of thing happens. I just, fine, give me some more. And then I'll dump whatever contracts I don't want to hold. So we go up a little bit more, and we don't get higher than we were here. We get a lower high pivot, and a lower high on the premium as well. Okay, that's your big heads up. This is a pretty divergent, we are lower, yes, but we're down at 685. This was at 671. This is just barely lower, and this is a big drop. That's too big a drop. This is coming back. So you say to yourself, "Oh, all right, maybe now I see that maybe I've made a mistake here." So maybe you tighten your stop, maybe you drop the trade. But should you go short? It's a major divergence. All right. So let's suppose you do all of the wrong things. Okay, you went long over here and you shouldn't have. And then you decided to go short again because of this major divergence. So let's suppose you went short. All right. So you go short, and then just as you go short, you get this lower high on the ES, but a higher high on the premium. Ooh, 671. That's where you were over here. Uh-oh. Now it looks like it's going back up. But you hope that that will correct itself, and you get down here and you're real happy because now the premium tanks again, and we're down at the 684 on the pivot, and we're saying, yes, this is short. And you're happy. So we come back up. We have a little bit of a tie on the premium here. We're at 571. That's where we should be. Okay, that's all right. And we drop to here. We get a low pivot. We're at 638. All right. Is that about where it should be? Yeah, it is. So it's not really helping us. It is higher than this. That's okay. It should be higher on the premium. And based on where we were over here, okay, at around 2120, you're right around 2120 here. Premium is just slightly below. You're okay with this short. But if you went short here, okay, where's your stop? Okay, 2150. And now you're back to 2150 in here. Premium is confirming, so what do? You remember what the premium said over here. Everything is suggesting you should be going down. In fact, let's put a little marker there. And you're really not quite sure what you ought to do, because you've been going long, then you've been going short. Now you're short, and it's now indicating you're going long, and you got this big move up on the premium here. Oh, did I forget to mention? You had a big move up on the premium there too. Oh, I'm sorry. We forgot to show you something. I completely ignored that big bar up. Okay, we're stepping up, and then we get a big bar up. Ooh. You need to take note of that. Now, if this is moving down, we should be getting big bars down. But instead, we get this big bar up. Fine. Market moves up a little bit and then comes back down. So you're thinking, well, all right, maybe that's not a big deal. But then you come to this pivot point and you get another big bar up. This is moving up. Okay, from this low, you get this first bar pushing up. Again, this first bar pushing up. That's a higher high. You've got to take consideration to these first bars, and we don't talk too much about that from the standpoint of reading the premium, because most importantly is where is the pivot bar. The pivot bar is very, very important. But the first bar up is also somewhat important because it's showing you what the at least immediate direction is. And right now, we're moving up. So if you were short and you're still holding the short, you've got to reconsider your position. You've got to. Because that big bar up shouldn't have happened. If this is going down, we should be getting big bars down. And right now we're not. We're getting big bars up. So, watch what happens. Let's move forward. Get this big bar up, and the market starts to move up even more. And it moves higher until this pivot point here, you get just this major divergence once again. And now, all right, you're not quite to the level that you were hoping to be at, but you've got a major divergence here. Here compared to here, all right. This big divergence is going to send this thing back down. So if anything, now's the time to short. We've been talking about reading the trend, right? But reading the trend is the trend is not just something that just stays, it maintains the same direction at all times. Significant trades in both directions can occur. All right. If a trend is changing, you should be seeing a major shift in the premium. That's a rule. You got this guideline up here because of some aberrations in the premium that suggests this thing is potentially moving back up. Yet you got this big bar here that says we're moving back down. And then you finally get this divergence over here, and that confirms right now, at least, we're moving down. So don't be overly concerned about the big trend when the little trends that are going on can make you a lot of money if you just read them correctly. Okay? So, anyway, there's your short. And down you came, and before the day was over, that price was breached. And on the following day, you open and you go right back up to where the premium said you might test. And that's a short. Because you were over here at 556, and on that pivot, you're at 596. You got this great big divergence from this read on the premium compared to where it was here That's a big shift. You know right away, shift to take a short. Right away. All right, one more day, and we'll be done with the discussion of the trend. So we'll conclude this video at this point. What happens on the following day? We'll discuss that in our next video.